If we're talking about the future of Bitcoin, I think that we're in the Bitcoin gold rush era. And it started in January of 2024, and it will run till about November of 2034. It's a 10-year. How many people know what happened in November of 2034?
We're going to be revealing the truth surrounding Michael Saylor's very strange but very specific November 2034 Bitcoin prediction that he just made at the Bitcoin conference in Madeira literally days ago. So to uncover all of this, we're going to be looking at the 3 reasons for why Michael Saylor believes that this 10-year digital gold rush could send Bitcoin on a 500x rally to $15 million per coin.
And as they realize that, Bitcoin is going to demonetize all these other assets over time. It's going to first demonetize gold, because gold doesn't make any sense, and then it's going to demonetize the other store of value assets, the real estate, the S&P index, the bonds. And so you're going to get a 30x bump as we demonetize gold, but there's no reason why you can't have a 500x increase in today's dollars by demonetizing these other things.
So before we get into the maths back in Michael Saylor's 500x Bitcoin prediction and how it relates to this very specific 10-year digital gold rush that Michael Saylor sees coming, we need to kind of explain all of this with 2 quick charts. So the first is the 200-year evolution of gold mining. The only thing you need to know or notice about this chart for now is the fact that the amount of gold has only grown that our civilization has found since the 1800s. And that is because we've seen multiple different gold rushes happen all around the world over the past 200 years. Now, this is mainly due to technology. So let's take a look at a couple of the major gold rushes. So we can see here the Klondike gold rush began in 1896 and it went into 1899. Now this was in Canada, and to explain what a gold rush even is, essentially when somebody finds gold and news of that gold discovery spreads, naturally humans from all around that area and even that country would flock to that place and try to get as much gold out of the ground as they could. So that is kind of what a gold rush is. We're not going to get too technical for today's video, but I want to have a look at the 10 major gold rushes, because having a look at each of them is going to give you clues as to why Michael Saylor believes we're only going to see this 10-year window. So the Klondike gold rush only went on for 3 years. The Otago gold rush in 1861 in New Zealand, again, only went on for around 3 to 4 years. Something similar with the Victoria gold rush. That went between 1851 and 1869. So this one was a little bit longer. This was about 18 years, and this was in my hometown of Australia from a past life, it feels like now. Then we got the Brazilian gold rush. This was a longer one. So this is probably the outlier on this list. We can see it went for around 300 years. Then we have one in Alaska that went between 1899 and 1909. So this was a 10-year gold rush in Alaska. We have Australia once again on the list. This was in Western Australia. We saw a gold rush between 1885 and 1993. So for those people thinking, hey, it's strange, out of the 10 major gold rushes around the world, Australia seems to be popping up on this list a few times. Again, we are only a small country. 25 million people live in Australia. I think there's more than 15x that amount of people in America. But the reason you see so many gold rushes in Australia is because it's huge. We have this massive big landmass, as you can see, and we are actually well known for the fact that we have a lot of commodities and minerals, okay? So we have a lot of gold, we have a lot of uranium, we have a lot of copper, we have a lot of coal, okay? This is why you're going to see a lot of Australia. Now, again, we can see a gold rush in Chile between 1883 and 1906. Again, you know, about 23 years. We had another gold rush in Johannesburg, South Africa, only lasted for 1 year, okay? Ghana is seeing a gold rush today. And Siberia saw a couple of gold rushes in the 1830s and the 1840s. I believe one of the major gold rushes this specific website left off their list was actually the California gold rush. So the first thing that's kind of important to note about these list of gold rushes we're going to look at today is the fact that gold's been money for like 5,000 or 6,000 years. Why do all of these major gold rushes occur in the past 200 years, essentially since the 1800s. And that all has to do with technology. Again, this relates to Bitcoin and the 9 to 10 year gold rush Michael Saylor is predicting. We can see that it wasn't until the technology changed that we started to see all of these different gold rushes all around the world. So it wasn't just the fact that gold mining equipment was getting better. You can see the devices that were used in the 1840s, 1860s, and 1890s by this cool little website here. They were improving in the 1800s, but so was communication. So again, we saw the advent of the telephone actually spring up midway through the 1800s, and this changed the communication, okay? So when somebody would find gold, this information spread very quickly, and people from all around the world descended upon this location and sucked all of the gold out of the ground until it was gone in essentially a decade. So that brief history of gold rushes should have given you guys a small little hint about what we're going to be talking about in today's video. Now let's get into it by playing this clip of Michael Saylor right now.
How many people know what happened in November of 2034? It's an important date, you know. If you pull Clark Moody's dashboard, you'll see that. In November of 2034, 99% of all the Bitcoin will have been mined. And the last 1% comes out over the next 100 years. So for all practical purposes, stock to flow becomes irrelevant. The stock to flow ratio of Bitcoin is infinity in 2034. It's within the tolerance of just random hourly trading of the asset. So it becomes noise.
So Michael said a lot there, as he usually does. And we're going to come back to how stock to flow hits infinity in 2034. But let's begin having a look at this little chart here, because it explains what Michael Saylor was talking about. We can see that 90% of all the Bitcoin that will ever be created were mined as of November 2021. So this was the first 12 years of the Bitcoin project. 90% of the Bitcoin was mined, okay? And we can see that by September 2034, 99% of all of the Bitcoin that will ever be created will have been mined as of November 2034. So between now and November 2034, the next 10 years, we're going to see about 8 to 9% of the Bitcoin supply mined. So Michael's simply just looking at the scarcity of Bitcoin, but he's also overlaying the fact that we now have this unprecedented demand for Bitcoin that's going to create a 10-year gold rush. And like the gold rushes in the analog world, I believe that the reason Michael thinks this gold rush is finished in 10 years is because all of the easily accessible Bitcoin will be mined and in the hands of strong hands and convicted entities who aren't selling their Bitcoin for a long time, okay? This chart here of the amount of Bitcoin on exchanges kind of indicates that maybe this gold rush has actually been going on quietly for the past 4 years since 2020. That's the case I routinely make on this channel. We can see for the first 10 years of Bitcoin's life, nobody cared about Bitcoin, okay? We can see the amount of Bitcoin on exchanges only ever grew, and that was because people weren't interested in hodling. They were just selling their Bitcoin on exchanges for paper profits and going out there and buying a Lambo and a fiat mansion. But now since 2020, coins have been leaving the exchanges, okay? Now, this could be an indication that this gold rush actually began in 2020, okay? But it doesn't matter how you cut this cookie, the amount of Bitcoin being mined over the next 10 years between now and November 2034 is not much, okay? So this chart's amazing because it's showing you the exponential decay of the block reward for Bitcoin that happens every 4 years. We have kind of these halvings. So in 2040, we can see that the block reward for a miner who finds a Bitcoin block every 10 minutes is going to be 0.2 Bitcoin. So that is like 20% of one of these puppies right here. I wish this was worth a Bitcoin, but it's probably like a $2 keychain. But it looks cool. So 20% of a Bitcoin is going to be the block reward in 2040. So let's fast forward to 2092, okay? It's about 70 years time. Hopefully everyone watching this video is still alive by 2092. But the block reward for a Bitcoin miner who finds the next block of Bitcoin every 10 minutes is only going to get paid around 2,000 Satoshis, okay? So today, 2,000 Satoshis is only worth around $1 US. I would love you guys to comment down below and let me know what you think 2,000 Satoshis is going to be worth in the year 2092. I think it's going to have to be worth a lot to subsidize all of those miners all around the world competing to find the next block of Bitcoin, okay? So all we need to take away from this chart is that Bitcoin is very scarce, and this is what Michael Saylor is basing his assumptions on. By 2034, 99% of all of the Bitcoin have been mined, which means that people are going to be competing over the Bitcoin that's going to be mined over the next 10 years. And in previous interviews, Michael has kind of talked about these 3 catalysts that will be essential to take Bitcoin from just a digital gold worth, $200, $400, $500,000 a coin to be worth literally millions of dollars per coin. So he obviously says the FASB, fair value accounting, is the first thing Bitcoin needs, spot Bitcoin ETF, and the fact that banks are actually going to custody Bitcoin, okay? So we've kind of talked about this in the past, and I am filming another video on this shortly as we do watch every single major bank on Wall Street capitulate and try to offer their clients Bitcoin products. I think it's time to revisit this prediction by Michael Saylor, but he's kind of made the case in the past that once you have these 3 things ready, this is going to be when the competition floods into Bitcoin. This is what we're seeing today. We have a spot Bitcoin ETF. FASB recently changed their rules regarding Bitcoin accounting, and it looks as if the banks are capitulating on Bitcoin as we speak. But let's actually talk about that in a little bit more detail another day. And let's talk more about how Michael Saylor believes Bitcoin can 500x to $15 million per coin, because that number might shock some people. It sounds crazy, sounds like a long way from here. Many people think that Bitcoin's best returns are behind it in those first 15 years. Many people think they're late to Bitcoin. And I don't think that's the case because of the history of money, because of the 5,000-year history of money and the total addressable market cap for money in the world today. So let's have a look at all of the money in the world today. Now, this website here is the best visualization of looking at all of the different types of money. So it starts at the top. You can see how small the gold and the silver markets are. So the gold market's around $12 trillion in size today. The silver market is way smaller. We can also see all of the physical currencies around the world. They make up around $8 to $10 trillion. So we have US dollars, euros, Chinese yuan, Japanese yen, and we also have all of the wealth held by the world's billionaires. We can see as of late 2022, this was around $12 to $13 trillion. This has actually increased a lot since now. The central banks, they hold around $30 trillion. But let's move it down here. We can see the S&P 500 in America has about $36 trillion. And now this is where things get interesting. The global money supply to around $50 trillion today. Stock markets all around the world are around $100 trillion. We have $300 trillion of debt. We know the real estate market's about $320 trillion. So when you actually have a look at the amount of global wealth in the world, this website pegs it at around 460 trillion. When you add in the debt, you get somewhere around $700 to $800 trillion, okay? So this is the total addressable market cap for money in the world, okay? Bitcoin actually has to specifically capture to do a 500x and be worth $15 million per coin. Well, this is where you're going to get pretty bullish like myself, because I've run some numbers here. So believe me or not, I've actually determined that Bitcoin only needs $63 trillion out of this total $800 trillion of money in the world today. That represents around 8% of all of the money in the world wanting to flow into Bitcoin. And this small amount, again, it's only 8% of the world's money coming into Bitcoin, would push it up to $15 million per coin and give Bitcoin that 500x that Michael Saylor predicted earlier in the year. Now, the reason we only need $63 trillion is because of something called the Bitcoin multiplier effect. We can see here today, on average, the multiplier effect is around 5x, okay? So that means for every $1 that wants to flow into Bitcoin, actually pushes the Bitcoin market cap up by 5x. Okay, so you can see the numbers that I've ran here. Assuming $63 trillion of inflows, you times that by by the multiplier effect, that takes you to a market cap of $315 trillion for Bitcoin. Now that you've used the multiplier effect and you've accounted for the fact that not all the 21 million Bitcoin are available for sale, now you can divide that $315 trillion market cap by the 21 million coins. And when you do that, you get a price tag for Bitcoin of around $15 million per coin. That's the maths. That's what a 10-year digital gold rush might look like on paper. But what would it look like in terms of these 4-year cycles that we tend to see in Bitcoin that just seem to repeat time after time, where Bitcoin sees smaller returns in every bull market? Does it actually mean that these models are broken in the future?
In the near term, Keith, in the near term, these things work. But over the long term, adoption makes sense. Like all of your arguments about why you should short Facebook in 2013, they're all wrong. Facebook's trading at $280 a share. They're all wrong. You should have never sold it ever, ever, ever. Now, what happens to all these wonderful models if 10 billionaires decide to buy $1 billion of Bitcoin each and announce we bought it, we're not ashamed of it, we're going to buy more? All your models are destroyed, completely devastated. Bitcoin goes to the moon.
Well, if you want to learn a little bit more about why Michael Saylor believes that all these models will be destroyed in the coming years, we filmed a recent video having a look at the 5 reasons or the 5 potential catalysts that could trigger a Bitcoin supercycle. I'm going to put a link to that video right about there. With all that said, hope you guys enjoyed this video. Hope you enjoyed that one. Let us know in the comments down below what you thought of today's video. We'll see you in the next one.